Hello, everyone. In chapter one, we focus on managerial accounting and different type of cost concepts. First, there are two main types of accounting, what we call financial accounting and managerial accounting. When you think about financial accounting, this is when we prepare reports that are going to be viewed by those outside of the company, what we call external parties. We prepare reports such as income statement, balance sheet, statement of cash flows, and these statements tell us information about a business organization that will be used in our decision making process. We're going to mainly focus this class on managerial accounting. When you think about managerial accounting, think about internal accounting, information used by those inside the company, managers, owners, supervisors, in order to make decisions about that business organization. Should we make a product ourselves or should we outsource it? We're going to use the information in managerial accounting to control operations, to prepare budgets for planning purposes. In essence, information needed to run the business organization. So there are some different type of cost classification we're going to talk about. Understanding how do we assign costs to what we call cost objects. How do you assign costs when you're making the actual product? We'll look at preparing different types of financial statement, predicting what we call cost behavior, response to change activity, as well as making decisions. So you think about managerial accounting, think about information used to make decisions from an internal standpoint. So we're going to first look at how to assign costs, what we call direct costs as well as indirect costs. Okay. Let's begin with direct costs. Let's say we are a company and we're manufacturing a product. What type of product do you want to make? We're doing t-shirts, electronics, automobiles. So when you're making an actual product, that's what we call direct costs. These are costs that we can easily trace to the actual product. So if you think about design of an automobile, so of course the major items that's used to make that car, the windows, the steering wheel, the tires, those are what we call direct material. Materials used to make the actual product. Excuse me. Then you have your direct labor costs. So think about those workers on the assembly line that's making the actual cars. The salaries of those employees are known as direct labor. But then we also have what's known as indirect costs. These are costs that we cannot conveniently trace back to a single product. So again, we're talking about automobile. So an automobile company may buy different type of oils, things of that nature that's going to be used to put into different type of vehicles. So you have these indirect costs, which we'll speak more about. These are costs that we can't trace to a single product, but they're known as manufacturing overhead. And when you have an actual product, the cost of the product consists of three elements: direct material, direct labor, and what's known as manufacturing overhead. So again, when you think about manufacturing overhead, these are costs incurred to support the cost object. So screws, bolts, oils, smaller items needed to produce the actual car would be examples of different type of indirect costs. And again, indirect costs goes into a category known as manufacturing overhead. Okay? So we now look at examples of the three basic manufacturing cost categories: direct material costs, direct labor costs, and the manufacturing overhead costs. So you ready? Let's go. So when you think about direct material, these are the actual materials that are being used to produce the actual product. We can trace these items to the cost directly. So example would be a radio installed in an automobile would be an example of direct material. Direct labor refers to the labor cost that we're going to incur in order to produce a product. So as I mentioned before, the wages or salaries paid to those working on the assembly line to make an automobile would be an example of what we call direct labor. Now with manufacturing overhead, this would be all the costs incurred except for direct material and direct labor. So any cost to produce a product that's not direct labor, direct material goes into a category known as manufacturing overhead. So when you think about the indirect materials, so again, we talked about the nuts, the screws, the bolts, the different type of oils that are put into an actual automobile will be examples of indirect material. When you think about indirect labor, think about a factory where we're making the actual product. So the labor cost for the security guard or for the receptionist would be examples of indirect labor. They're not making the actual product. However, we must have those people in place in order to run the actual manufacturing plant. So you think about manufacturing overhead, it consists of indirect materials, indirect labor, and any other manufacturing costs except for direct labor and except for direct material. So you think about the overhead costs, it could be depreciation on the manufacturing equipment, utility costs inside the warehouse, property taxes, insurance, examples of manufacturing costs that are going to incur for this company, but again, they're not tied into any specific product, therefore they're known as indirect costs and they go into the category known as manufacturing overhead. Now there's two types of costs we look at in manufacturing, what's called prime costs and conversion costs, and we'll talk more about these in greater detail. Prime costs, the prime cost of making the actual product, consist of direct material and direct labor. So your prime cost consists of direct material and your direct labor. When you think your conversion costs, we're now conversion or we're taking these items to manufacture the actual product. Your conversion costs consist of direct labor and manufacturing overhead. So again, prime costs, direct material, and direct labor. Conversion costs consist of direct labor and your manufacturing overhead costs. Now, there are other non-manufacturing costs that are going to take place. There are going to be selling costs, and there's going to be administrative costs. Let's begin with the selling costs. So we're making an actual automobile. In order to sell the product, we have to do advertising, we have to do marketing. Those are examples of different types of selling costs. They're known as non-manufacturing costs. Remember that term. And we'll see, we're going to separate our manufacturing costs from our non-manufacturing costs. There's also administrative costs. So outside of the manufacturing plant, let's say if we're Ford Motor Company, Ford has a headquarters somewhere. They have the president, the vice president, the VPs, the attorneys, etc., even the accounting department is there. These are known as administrative costs. They are non-manufacturing costs. What you learn is that we separate manufacturing costs from our non-manufacturing costs. Okay? So speaking of that, there's something called product costs and period costs that we're going to focus on next. To give you a hint, when you think about your product costs, that consists of your manufacturing costs. Your period costs will represent your non-manufacturing costs. So when it comes to product costs, we're thinking about all the costs included to either acquire, purchase, or to manufacture a product. Okay? So, based upon what we learned so far, what items are considered as part of your product cost? I'm waiting. If you said direct material, direct labor, and manufacturing overhead, then you are correct. So we'll look at the different types of product costs. We begin with our direct material costs. We begin with the raw materials. So for a manufacturing company, that could be the steel that's used to produce an actual automobile. So we begin with those raw materials. Those raw materials then put into production to manufacture the actual product. So think about the materials going down the assembly line. That's what we call work in process. We are now working on those materials. We add the windows, the doors, the brakes, etc., to produce the actual product. So it goes from raw materials to work in process. And then once we're done with the product, it's what it goes called what we call our finished goods cost, which means now the actual automobile has been completed and it is ready to be sold to the actual customer. It hasn't been sold yet, but when it's finished good cost, that means the automobile is now complete and ready to be sold to the actual customer. So from a transfer of product costs, we begin with direct materials. They go from raw materials over to work in process. The same is true for our direct labor and the overhead costs. It goes from work in process over to our finished goods. And again, once the product has been completed, their cost is transferred from work in process over to what we call our finished goods inventory. Meaning again, the product is now complete and ready to be sold to the end user. Now, when we actually sell that product, it goes from finished goods to another account called cost of goods sold. Now, I know there's a lot of terminology. This first chapter has a lot of new terms, but we're going to break them all down so you have a better understanding of these different terms such as raw materials, work in process, finished goods, as well as cost of goods sold. Okay? Now, it's time to prepare what we call the financial statements. This is a report that tells us certain information about that particular business organization. The product cost, which consists of direct materials, direct labor, and overhead, goes to what we call the inventory account. The inventory account is an asset, something of value, that is shown on the balance sheet for the company. Now, once we actually sell the inventory item, it goes over to an account known as cost of goods sold, which is an expense account. So the sale price of the item, along with the cost of goods sold, goes on a different statement, which is known as an income statement. And once again, we'll learn more about these two different statements. Now, I mentioned that we have selling costs and admin costs. These are your non-manufacturing costs, which are known as period costs. Period costs are costs that we're going to expense right away on the actual income statement. So whenever you have selling costs and administrative costs, those costs are going to be expensed as soon as they incur in that particular accounting period. Compared to your product costs, goes into the inventory account first, and they're shown as an asset. Then once you sell those items, the cost becomes an expense and what's known as cost of goods sold. I'm going to come back with a second video to explain more about management accounting in a few minutes.